So step number one is called mapping your pattern. And I framed it that way because when we start to look at the data that exists around your biggest trading mistakes, right, we can look at the specific information to create a map that is going to recognize the steady escalation that will generally occur prior to it. It does not help you to know after the fact that you just made a mistake. I mean, it's just like seeing a trade in hindsight doesn't really pay very well. So you have to have the foresight to understand what's coming. And so as traders, you are incredibly skilled at recognizing patterns in the market and finding opportunity. And so we need to do the exact same thing around your biggest trading mistakes. And so what we're looking for are the triggers. What is going to cause your mentality or your emotions to begin to deviate from what is optimal? What are the thoughts that come up around that time? Specific thoughts that you have or things that you would say out loud. What are the emotions that you're feeling at that time? What are the bodily sensations, whether it's increased heart rate or sweat or tension in your hands? What are the actions that kind of may go along with this? Opening up several different charts that you would normally, hyper focusing on P&L, hyper focusing on price action. What are the specific changes in your decision making process that would occur then? What are the changes in your perception of the market? And if you start to actually capture that data around the escalation of your emotions, or kind of in the run up to your mistakes, you will see that these patterns happen again and again and again. And yes, of course, there's going to be some individual variation, kind of situation to situation. But what that does is give you the vision to be able to act prior to the point when your emotions start to shut down higher brain function. Okay, so this is kind of the first rule that is essential for people to understand. If you don't understand this rule, you are going to make a lot of mistakes and you're going to create a lot more emotional volatility than is necessary. Okay, so I call it the malfunctioning mind. A lot of people will know this as the fight or flight mechanism, but the reason I don't love that term is because it sounds a bit too kind of binary, right? Really what we're looking for is this sort of steady escalation of your emotions, almost like kind of turning up the volume, right? Sometimes the volume just gets jacked up and you go from, calm to, revenge trading in minutes. But most often there's a steady escalation. And so when that escalation kind of reaches this sort of threshold, your mind will be compromised. And as it continues to rise, the emotional system will override higher brain functions, which include thinking and planning and decision making, right? That the voice in your head will sort of kind of lose potency. And so when that happens, you also lose the ability to control your emotions. So make sure everybody gets this right. The emotional system has the power to shut down or diminish the part of the brain responsible for controlling emotions. So it's a sadistic system. And if you're not working within the boundaries and the rules of that system, you get into a spot which many traders and many athletes end up in, which is aware of what's happening, but unable to do anything about it. And so on a scale of 0 to 100, we're talking about like your emotional level is about 80. Okay, so 50 is optimal, right? You need emotions to power the brain and be at your best. When people are in the zone, when you are at your best, there's a lot of emotion behind you. There's a lot of energy and intensity behind you. So 50 is optimal. Around 75 or 80, you will be aware of what's happening, but kind of paralyzed and unable to stop it. And that is incredibly infuriating. It's incredibly anxiety provoking. You feel like you should be in control. You feel like you're self-sabotaging yourself. And none of that is true. You are just emotional enough to have the part of the brain that would normally be able to start to control or correct your emotions is effectively kind of in a straitjacket. And so the way to solve for this, right, is to recognize when your emotions are beginning to escalate and you take action then. Now, the taking action is really kind of dependent on your understanding of the cause. So if we're in agreement that emotions are not bad and that we can use emotions as a signal, what the heck are they signaling? So broadly speaking, emotions can be used for intuition. Emotions can signal weaknesses in your strategy. Emotions can signal underlying flaws or biases or illusions or wishes that you have in the recesses of your mind. And of course, they can signal personal stuff, but we're not going to get into that now. But for the most part, it's an illusion of control, an illusion of emotional control, high expectations, hindsight bias, confirmation bias, hating mistakes, hating to lose. These are examples, expecting yourself to make money every day. These are examples of the underlying kind of flaws or biases that run in the background of our mind, and they get exposed, and you can recognize that they are present when your emotions have risen too high. So you have to do this sort of analysis to break out and understand the underlying cause of your emotions. You can't just do battle against them, right? Because the battling is what doesn't work. You're trying to control it. No, we're actually trying to correct the cause of that excessive emotional volatility, which is step 2.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.